Yeah.
All right, cool. So right now we're gonna start. So this meeting is about money management. So a lot of people talk to us about like money management. Always like the thing is, I want to buy some stocks, right? So like, how much money should I put into stocks? What money should I risk, and all of that. So today we have Emmanuel that is gonna share with us a good money management strategy in order to know like how much money you should invest once you're looking at stocks and all of that. So Emmanuel, oh yeah, one thing also because in the group a lot of people were talking about BlackBerry, and there was a big jump of 30% this morning. So we're gonna spend maybe like 5 minutes at the end just to talk about it and like share insights. So Emmanuel, whenever you want.
Yeah, thank you very much, Bryce. I hope everybody had a pretty good weekend and the market is starting pretty nice with you. So, yeah, today we're going to be talking about money management. This is actually one of the most crucial things or most critical thing that you should understand and discipline yourself about when it comes to investing. Um, it's a really like really small topic, but one of the most important because if you look on the websites and on YouTube and everywhere, you will see people talking about strategies, talking about stock, talking about this and this and that. Very few people talk about money management, but this is actually one of the most important because everything you do, if you're not managing your money correctly, you will definitely just lose that money again. That's why they say that. That's why they say um, even if you share the money proportionally to everyone in the world right now, in 100 years, that same money will go back to the ones who have the most right now. And even Warren Buffett said, uh, traders or people who do not have money management strategies, they're actually just holding money for the patient investors, which is an investor who has money management, a really good money management strategy. You can make 100% today. You can make 10,000% today, but if you don't manage it well, you will definitely lose it the next day. So this is one of the very important or even like the most crucial information that you can use in your investment. So I'm just gonna share my screen here as we're going through this.
Did you want to watch this? You're showing some stuff on the screen.
So you guys can see my screen, right?
Yes.
Okay, perfect. So when it comes to money management, the other word that that you're gonna be hearing somewhere will be risk reward ratio. And so yeah, we'll be talking about the risk reward ratio, which is the money management strategy. And what we'll talk about will be what is actually the risk management ratio, why you should use it, and how you can calculate it. And then the summary, and at the end we'll have a short Q&A. So the money management or the risk reward ratio, what it is actually, it's actually um, when you are positioning yourself into a trade, what are you willing to lose on that particular trade, and what are you looking at as a reward for your risk? Because as you know, when it comes to investing, it's all about taking risk. And if you read at many of the brokers websites, and most of the time when they sell the stocks or any particular security, they ask you, they tell you, do not invest money that you are not willing to lose. So every time you are investing, you are taking a risk of losing the money that you are investing. Now, when you are doing that, you need to keep in mind the risk reward ratio. How much is it that I'm risking right now? And what is my potential upside from this action that I'm taking? Another way of just thinking about this, I was thinking about this in a like a common thing is like, for example, when you are driving, you are speeding on a highway. You want to speed so fast, you want to go at 160, for example. But by going at 150, 160, you are putting your life on danger. Like it's your whole future that you are putting on danger just for a small feeling of gaining like 1 minute to arrive a little bit earlier where you are going, or 10 minutes. So if you calculate the risk reward ratio when you're speeding on the highway, it actually doesn't worth it at all. But I know the feeling is really awesome. It's fun, but so it's just this mindset. When you have this mindset and you put it in everything that you are doing, you will start looking at life differently. So yeah, when we are talking about the risk management, the risk reward ratio, here we are. Yeah. So when we are talking about this, one of like the different rules that we are always looking at is that we are looking at every time you get in a trade, you are looking at a minimum of one time what you invested, one time what you risked. So as you can see here, usually it's 1 for 1, 1 to 2, 1 to 3, 1 to 4. And if it's really just a crazy market, it can go to 1 to X. So you risk 1 and you're expecting to get X time what you risked. But the basic that you should use every time you're trying to calculate your reward is these four first 1 to 1, 1 to 2, 1 to 3, 1 to 4. So once you get to 1 to 1, you can start taking your profit. 1 to 2, you can take more of your profit, and just save it, keep it in cash. And then 1 to 3, 1 to 4, and so on. So one of the things that you should always remember is that when you are investing, the rule of surviving and investing is to be able to sustain 10 losing trade in a row. You need to be able to sustain 10 losing trade in row and still be able to recover from that loss. So what we're going to do right now, I'm just going to do simple math. We're going to look at numbers right now, and I will show you pretty much what this actually means. Another thing that I should just mention before we go to the Excel sheet is that you can do your risk management based on either the percentage of your funding or your account, or you can also use a dollar amount. What I mean by percentage is that when you're investing, you can say, for example, okay, for every trade that I'm going to take, I want to invest at least 1% of my funding. So if you have $10,000 account, you will want to invest no more than $100 per trade. If you have if you want to trade at 5% per risk, then if you have a $10,000 account, that means you should not invest no more than 500 per trade. Now, if you want to go as per the dollar amount, so then you can determine based on your investment profile. You can say, okay, for me, I'm willing to lose $200 for every trade that I make. I'm willing to lose $100 for every trade that I make. Now, when it comes to big stocks like Apple or Tesla and stuff like that, most of those stocks are pretty expensive. So when you're trying to respect the rules of investment, it's not always easy for you to invest in those stocks unless you have a really good account. So what I do, or what people do sometimes, is instead of investing in those big stocks, instead of buying one stock only of that big stock, that big company, you can buy options, which are a little bit cheaper than the actual stock, but they give you pretty much the same value, pretty much the the same reward. The reward is even a little bit higher, but you have the right of buying that particular stock. So we're gonna look at the numbers here. I'm just gonna show you my Excel sheet. Now, what I said is that every time you're investing, what you want to look at is to be able to absorb or sustain 10 losses in a row and still be able to recover from that. So that's what you want to look at every time you are investing. Now, for example, just looking at this is my calculator that I use most of the time. So depending on your account sizing, you can see that if you are risking, for example, if you have a $10,000 account, if you are using 1% of your account, which means $100 per trade, that means the maximum you can lose, like it doesn't mean that the maximum you can lose, but you're gonna be able to sustain up to $1,000 of loss if you are using a 1% account, 1% trade per account, 1% risk per trade. Now, depending on your investor profile.
Sorry to interrupt. Could I just ask a quick question for clarification, if that's okay?
Yeah, sure, Richard.
Thank you, sir. Are you suggesting the 1% is the actual number we should be looking at per trade, or are you just using that as an example? I'm just trying to frame exactly what I'm hearing.
Yeah, right now I'm just using it as an example, but
Thank you.
I was planning to tell you this at the end, but actually the recommended trading profile is 1 to 2% per trade. Why that is that I'm just gonna show you my screen again. When you are trading, you need to be able to understand your investor's profile. And what I mean by that is that you need to be able to know, okay, how much am I really willing to see as a loss on my account? So if you are a conservative investor, you're gonna say, for example, okay, I have a $10,000 account, but I don't want to lose more than $1,000 on my account. So that means the risk that you want to go with, the profile that you want to go with, is the conservative profile, which is a drawdown of 10% maximum. Now, if that is your profile, then you should only invest no more than $100 or 1% of your account per trade. If you are an average investor, which is somebody who say, okay, I do not want to lose no more than 30% of my account, no more than $3,000 of my $10,000 account, then you can go with 3% per trade. Okay. And when it comes to a risk, an aggressive investor which is an investor who takes a little bit more risk, those are the people who can go to 40 to 50% drawdown on their account. And when you are going to 40 to 50%, that means you can go to 5% per trade, 5% of your account per trade. But for people who are beginning, I know we have a lot of beginners in this group, and some people do not have like really large accounts. I would definitely advise you to go with 1 to 2%. That is the most safe position that you can trade with, because you want to be able to sustain this drawdown and still be able to recover from that. So when we are looking at these numbers here, what you can lose is, what you want to be able to do, what you want to be able to sustain is 10 losses in a row. And then you want to look at how many trades will I need to recover from that loss. So if you are trading a 1-to-1 reward ratio, then if you have lost 10 trade, you're gonna need to recover by gaining another 10 trade. If you are trading at a 1-to-2 ratio, you're gonna need to have at least 5 successful trade. If you are trading at a 1-to-3, you're gonna need to have at least 3 or 3.3, which is 4 successful trades. And if you are trading at 1-to-4, then you'll need 3 successful trades to recover from that loss. And as you can see, the bigger or the higher your trade, the more riskier you are, and the harder it's going to be for you to recover. For somebody who lost 50% of their trade, 50% of their account, they will need at least 50 trade in order to recover while trading at a 1-to-1. So understanding this is actually very, very crucial. Everything you do, if you put all your money in just one trade, you say, oh, Tesla is one of the most secure one of the most secure stocks and companies, and I want to invest in that. You just buy one Tesla. The problem is that when you buy that one Tesla, if it goes down a little bit, you're gonna have that big red in your account, and it doesn't feel good at all. And another problem is that you won't be able to take on any other position because you don't want to have more reds on your account, and because you trust in the accounts in the particular stock so much, you will not easily just let that trade go, like sell the stock in a loss. You will probably wait and wait for it to recover. But while you are waiting for it to recover, there are other opportunities that are going in other companies and that you are losing on. It's not losing, but you are missing on. So what understanding this gives you as option is that you have more option. You have more option in a way that you're going to invest in this company, but if there is another opportunity that comes in the market, you will still be able to take that opportunity to and do other things. In the meantime, you are also protecting yourself from really losing your account or putting a lot of your funding at risk. All right, so that is pretty much it.
Yeah, I would like to just add a few things. Just for myself, I know that like last time we did a meeting about the 2% rule, and it's basically like really close to that, right? So like a lot of time we're gonna hear about the 2% rule. I encourage you to look for it, to like just Google it, try to search, because there is a lot of like documentation about it, and it helps you really like balance your risk, right? So if you want to like, you just want to make sure that when you invest in a stock, you don't like lose everything if something goes wrong with that stock, right? You just like have your limit, and you make sure that like a loss is only a small loss, is not like ruining your account. So that's why really like money management is really, really important, right? Yeah.
I had a question about stop loss.
Mm-hmm.
So when you buy the stock, you can make a stop loss so you don't lose all of the money. So would you consider that as like only lose that part that you could lose with the stop loss as the risk for the 2%?
Yes, exactly. What you say is right. That is actually another thing that you can use in order to manage your risk. What a stop loss is that for those who do not know it, a stop loss is that it's taking a position which says, hey, if this particular stock goes to this price, goes lower than this price or close to this price, I need my position, or I need to get out of this stock as soon as the price gets to that level. So yeah, that is actually one of the other ways that you can limit your risk. But one thing that I do not like about that is that a stop loss is actually a market order. And what the market order is, it means as soon as the stock gets to that level, the broker will execute your trade as a market order. And what the market order is going to be like, okay, who is willing to give me or to buy me this stock, and how much do you have? It's going to be like you're just throwing the trade there. They do not really respect your price, but they just throw the order. So if there was somebody who already had their trade there waiting to be fulfilled, and your trade just went into the market like that, it's just gonna take that trade, even if it's not at your particular price, but because there is an open position and somebody who is willing to buy at that price, then they're gonna exert it at that price. So I don't know if you catch that pretty well, because the difference when you put your order, you say, okay, I wanna buy at this specific price. That is a limit order. But when you put a market order, it's like, okay, I just wanna buy. How much do you have? How much are you selling it for? I just wanna buy. I just wanna sell. So how much are you willing to give me? I just wanna sell. I just wanna get out. So the problem is like you are selling on
somebody
pressure.
could give you a price that's not the normal price. They could put whatever price they want and make you buy it at whatever price they want to.
Yeah, so that's the problem. They will give you at whatever price is whatever price is available at that time. And especially if you are trading a huge account, if you are trading a huge account, it might be a little bit ugly, because there can be some order for like 110,000 and stuff like that. But if you are using a big account and you want to put like some big numbers, you won't get executed right away. But if you put it as a market order, they will just take all the pending orders, and it's gonna be a little bit bad. But yeah, that is actually one of the ways of limiting your risk. But you need now to put that in your numbers when you are calculating your risk. You need to put that in your numbers and say, okay, if I'm willing to lose only $200 of this particular stock, that means if the stock was at 300, for example, and you bought 2 of those stocks, then that means as soon as the stock gets to, if the stock was at 300, you want to lose 200, and you bought 2 of those stocks, then that means as soon as the stock gets to $200, you need to get out. So you need to calculate that by yourself before placing your stop loss.
So, sorry, Jennifer, go ahead.
No, I was going to say that was very helpful. Thank you. I didn't know about that market order part where I kind of knew what a market order was, but it seems like there's just no guarantee of what the price is going to be that way.
Yeah, exactly. They do not guarantee the price that they're going to be, that your order will be executed at.
Okay, great. So, yeah, thanks for that, Emmanuel. I said that we're going to talk about BlackBerry. And Emmanuel, if you can stop presenting your screen, I'm going to share mine.
Sure.
So I just wanted to first of all, if you have any questions about everything Emmanuel just asked, you can please ask them in the chat, and or you can also ask Emmanuel directly. We always talk about money management once in a while, so it's also it's really, really important in my opinion, right? So I just wanted to share something on BlackBerry, just because a lot of people in the group were actually looking at it during today, right? So Emmanuel, can you see my screen right now?
It's coming. Yeah, we can see it now.
Okay, that's good. So here I have BlackBerry, right? So we can see that here is the monthly chart. I'm gonna go in the daily chart. So here in the daily, we see that there is kind of like a big jump, right? Especially this is today actually, right? So the red bar is today, but we see that there is a big jump from from Friday actually, from last week, and it's just like going up and up. So there we can see that there is something moving from BlackBerry, because basically looking at the month, we can see that they didn't have that since like a while back, right? If I have to look back maybe until like this is like 2008, so they didn't have any like something happen like that, right? Ramesh, are you in the call?
Yeah, I'm the call.
All right. So yeah, I'm just asking because I know that Ramesh, you were looking actually at BlackBerry, and you talked to us also about like Reddit, that a lot of people were, uh, I guess, like talking about it. So I would like to know like if you know anything about the
Yeah,
opportunity.
no
And
problem.
yeah.
Yeah, I was told about this group through Reddit over the
Mhm.
last couple of weeks, and then I started to download that the Reddit app and follow the group. I noticed seeing what they were mentioning about and seeing how the market reacted.
Mhm.
So like the last 2 weeks, they were discussing about GameSpot and also BlackBerry.
Mhm.
So yeah, it's I don't know. What I heard from other people is it's a bit of a hype group, and some of them have a lot of professional experience with it. Um, so I think already it's a good indicator. But this group they would post stocks that would be emerging in the next couple of weeks or so.
Mhm. So what do you think about it long term according to the group? Is it still like an opportunity, or it's too late, or
I think so.
I don't
I
know
think
the
something
thoughts?
definitely to be a bit cautious, but there's definitely high traders there. They're spending on average, like some of they would post what they would have and what they had the return on, and some of them is very high in terms of their account. Um,
Mhm.
but yeah, it's another, I guess, insight. But at the end of the day, it's do your own due diligence and before you make a trade. Um,
Mhm.
but just like the person mentioned, yeah, it's definitely another area to look at.
Mhm.
Could be maybe someone from there have insider information. I'm not too sure, but so
Mhm.
far they predicted GameSpot and BlackBerry to go up.
Okay. Because I know that, like, I think a few months ago, Janelle, I don't know if Janelle, you're still on the call, but I know that you bought it, I think, a few months ago, and that you were really interested into it. So I was just wondering maybe if, like, you had also some insights. But
Yeah, I
yeah.
did mention it because I'm personally invested in it. My brother-in-law works
Mhm.
and my research on it because I do the product. I love the product, and I like that they're getting into more of the realm. So I'm a long-term or mid to long-term investor. I got in when it was like $6. I'm looking forward to
Mhm.
steady growth. Even if it dipped a little bit, I would still keep invested.
Okay. So you said that your brother is working for them, right? For BlackBerry, just because you're cutting out a little bit.
Yeah, so he does design, like when they were doing phones. He used to work for
Mhm.
them, so I was invested back
Mhm.
then. Yeah.
Okay. Okay, so I guess it was a good day for you. Yeah.
Yeah,
So,
I invest. I'm more proud of apps like APPS, Digital Turbine. That was my best
mhm.
investment that I'm really proud of. But this, it's like a
Mhm.
personal, long term. I like it. I like BlackBerry.
Mhm. Wow, that's only green, right? It's like a straight line. So,
Yeah, what they
all
do
right.
is pretty
Yeah,
cool.
yeah,
All
that's
right,
good. Yeah, thanks for sharing, Janelle. Uh,
no worries.
so, yeah, so like it's great just to hear. I just wanted you guys to like hear about like what some other people have heard about BlackBerry. It looks like they're also doing something with Amazon with AWS. So we'll see like in the near future what's the agreement. we know that like probably BlackBerry needs AWS, Amazon a bit more than the opposite. So we'll see how it goes. But I would say that it's definitely a stock to take a look at. I cannot really like go too much into technical analysis because when there is like major events like those ones, we cannot really like predict it, right? So it's really like fundamental at this point, looking at like what's the goals of the companies and what's the
Yeah.
releases they're gonna do, right? So
Yeah.
yeah, Emmanuel, do you want to add anything about it?
Not really. You have said pretty much everything, but something that we should keep in mind is also that when it comes to technology and security, BlackBerry has one of the most secure network, which means like most of the companies right now, they use BlackBerry phones for their communication outside of work. And I've heard, this is some speculation that I've heard somewhere, is that BlackBerry technology or their security technology is going to be used in some of the electronic vehicles just to make sure the network is secure enough and it doesn't put the person in the vehicle at risk.
Mhm.
So yeah, these are something that has, they haven't published it yet, but they're getting in some agreement with some electric companies to provide that security to those companies. As you know, there is many of these companies now are trying to produce electric vehicles like GM, Ford, and all the stuff, and not all of them are really that technical or that expert. They don't have that much expertise when it comes to security, and it will ask them to hire more IT stuff and stuff like that. So instead of doing that, they are looking into like giving the work to another company that is that has a good reputation for a secure network.
Mhm.
Yeah.
Okay. Yeah, thanks for that, guys. Really, thanks for sharing. Yeah, I think like it looks like it might be a great long-term opportunity. As Ramesh was mentioning, just like we all have to do our due diligence. But like it's definitely a stock that I have on my watch list, and I'm gonna see how it goes.
Yeah.
We don't know, maybe it's only an event. We'll see how it goes in the future, right? But definitely I would suggest to put it on your watch list because yeah, it might be great for long term, right? And
Yeah.
yeah,
uh,
so that's pretty much it for now. There is like a question from Mami. I'm gonna answer it pretty quick. Mami, sorry for jumping from the money management to BlackBerry. But I know that you were saying about like the rules for money management if you hold for a long period of time, right? So honestly, like if you have a stock, you really believe in a stock and you just put your money in, it works differently, right? So you wouldn't like wait for a 2% drop and just like sell, right? You know that like if you strongly believe in in the company, you did the due diligence, it might drop 10%, 20%, even like 30%. And the thing is that like it's really like according to like how you feel about it, right? So you have to know how much risk you're able to take and like how do you feel about like seeing your portfolio going down 50%. But if you feel comfortable, I would say like if it drops 10%, just leave it there, right? If this is really how it goes. But the money management strategy that Emmanuel was talking about was more related to like if you want to do maybe like more swing trading, right? You want to buy a stock, hold it for like 3 weeks, 4 weeks or something. So you want to make sure that like if you buy a stock and it goes in the wrong direction, then you get out fast, right? Without losing too much of your portfolio and you look for a new opportunity. But when it's long term, you can just leave your money and manage it a bit differently, I would say. There is Richard. You have a quick comment just before we finish. You can turn on your microphone. Yeah.
Yes, thank you. I just wanted to speak on the BlackBerry thing very quickly.
Mhm.
One of the previous speakers noted that she got in at $6 and it was a long-term play for her. And I originally, it was, I only do kind of 3-year minimum, 3 to 5 year kind of investments for me. But one of my early lessons was this BlackBerry. I got in around $9 about a year and a half ago, and I panic sold at in the $6 range in I believe in May. It might have been April, and I'm kicking myself for it now.
Mhm.
Thankfully, it was a small loss just because I hadn't invested, a large portion of my portfolio. It was a small loss, but still, I'm kicking myself for it. And I think that was a very important comment that previous speaker made. That I believe she said she was in it for the mid to long term. And if I would have stuck with my plan, like she's
Mhm.
willing to stick with her plan, when it dips a little, I would have been in the plus instead of the negative on that. So
Mhm.
I'm new to the group too, and I also wanted to express my thanks for what you all are doing and the
Mhm.
conversation and the knowledge you're providing. So thank you.
Yeah. Yeah, thanks, Richard. It's something really important with money management. It's sometimes really tough. I wouldn't lie, but we have to stick to the plan, right? Because like if we have a solid plan, this is what like brings us revenue. But like most of the time, I find that when I lost things, also same thing as Richard, is just I had a plan, I didn't follow the plan, and I should have. So it's like something. Yeah, stick to the plan once you have it, right?
Yeah.
Yeah.
So just to add a comment to that is this is where you can see also how important the money management is. Um, if you had, I don't know how big your position sizing was in compared to your portfolio, but if you had a good sizing and it did that drop, if you are if you had a really good sizing, that should not really affect you that much, because if you had like 1% only and it did that drop, that would be even less than your 1%, the 1% of your portfolio. And especially since you are thinking long term, then you would be willing enough to wait for the recovery.
You are
So
absolutely right. That hit it on the head. But it was early in my journey in this, and I panic sold. It went down 30, and I
yeah.
panic sold, even though in the grand scheme of things, it really meant nothing. Because it was all money I was willing to lose, and I believed in the company, and I believed in my plan, but it dropped 30, and I panic sold. So you're absolutely right. You're absolutely right. Thank you.
Mm,
Yeah.
yeah, that is really something that we should always look at. And when it comes to investment, I know everywhere there will be like, if you're going into investment, you're going to become like a millionaire very soon. You're going to make so much money very soon. But one thing that we should always keep in mind, it always takes 9 months to have a baby. Even if you go and try to get 1,000 ladies pregnant, you will still take 9 months to become a father. So you cannot rush into this. Always respect the rules, take the risk, the minimum risk as possible that you can sustain, and wait
Mhm.
for it. You're gonna grow slowly, and you'll have a really sustainable influence on
Mhm.
with your investment.
Yeah. Yeah. Thanks for that comparison, Emmanuel. For the stocks, there is Janelle asking about like the watch list. We're a bit running out of time, but what I can do, I can just like wait a second. I'll just show my watch list pretty fast. Those are the stocks I'm currently watching, right? So I'm just gonna go like briefly over it. So we talked about last time the psychedelics companies. So like this is one of them, right? So I got in quite early in those ones, so it's kind of really great return for now. There is someone talked to me about DM this morning, so I just added it to my watch list, seeing how they were performing. There is Tesla. Tesla is always on my watch list. I have some of Tesla. Those ones, I would say, what else is interesting? Fastly is recovering. So Fastly, that is working with TikTok. So if you're interested in technology, Fastly is one that I have. There is Bitcoin. Bitcoin is always there. It's dropping now, so it might be a great time to add some more. This is actually what I did. So we'll see how low it's gonna go, but like we don't know yet. Field Trip is another company, another psychedelics one that also put money in. What else do I have? MMD as well, another psychedelics. We talked about it last time. And I think, yeah, this one, DocuSign. DocuSign is really interesting. They work with e-signature. So like we see that with COVID, they were doing pretty well. So this is like what happened when COVID started, and they just like went up. And a lot of like companies are holding to that stock just because they are kind of the leader in e-signature. And yeah, that's mostly what I have. I have Air Canada, but I'm just watching. I'm not having any position in it. So yeah, that was mine. Just
I can add couple ones.
mhm.
Nano Imaging. That's one of the companies that I have on my watch list.
Mhm.
It's they are working on X-ray, a new way to make X-ray very affordable and easy for people to access. And I've seen Ark Invest, which is a hedge fund managed by Kathy Woods. They're investing into that too. I saw them buying a couple stocks recently, so I think there is a little bit more trust into that company, and there is a potential on
Mhm.
that. There is also
Just
which one is
something
the
quickly I want to say about ARC because actually I got them as well, and this is their chart. They're doing extremely well, and yeah, they are having DocuSign as well. So yeah, it's a good one to take a look at. A good ETF.
oh yeah.
Sorry to interrupt.
We'll have a chat about the about ETFs later, but this is one of the very uh, easy and very conservative way of investing. Just buying a good ETF and
Mhm.
let them do what they do, and you will just be collecting the gain from them.
Mhm.
Um, yeah. So another one that I was looking at is, where is it? A AIRG and PCTI. These are companies investing in 5G. One of them has a contract. They're looking for a partnership with AT&T, and PCTI. They have. It's one of the first 5G companies that give dividends. So it's something that interests a lot of investors because of the dividend side of it, and the fact that it is investing in 5G. It's working in 5G. So they're gonna be holding into it a lot. And ARG, it's more because they just have a contract with AT&T, and I believe that's gonna be a really good upside for them.
Mhm. Okay, that's great. So what I'll do, guys, I'll just for people that are not in the group right now, like if you want to join the conversation, I just shared a website. You have access to the WhatsApp link if you want to join the group and like join the discussion. I would say, and also if you want to ask any questions to Emmanuel, I just shared my platform that I'm using to watch stocks because a lot of people ask me what I'm using. It's called TradingView, so you guys can try it. And yeah, if you want to, it's also great if you want to share like pictures and stuff of like charts. So yeah, thanks again, Emmanuel, for all of that. It was really interesting. Pamela, do you have a question? Okay,
Yeah.
no. Okay, I thought that like yeah, she had a question. So I know that a lot of people also asked us about our watch list. So we're working on something where we can actually like share our watch list with a lot of indications like technical indicators and everything. So like just a good strategy what we're looking at when we are watching stocks. So it would be great if you follow. We're going to share more information about it soon. So again, thanks guys for joining. It was really interesting. Thanks Emmanuel. Thanks Ramesh for BlackBerry, and thanks Janelle as well. And Richard also, thank you for sharing what happened. Sorry for that, but like, thank you. Yeah, and we have also our meeting coming with Ashley on Wednesday. It's about cryptocurrencies. So it's about the Bitcoin. So if you're interested in purchasing Bitcoin, that would be a good meeting to join. I'm going to share the link of the event in the group, or it's on Meetup. So if you want to RSVP on Meetup. Cool. So thank you guys, and have a great evening.
Thank you everyone for coming.
Thank you all.
Thanks, guys.
Thanks so much.